Welcome, everybody, to the A Little Less Fear podcast. I'm your host for the show, Dr. Lino Martinez. Oh, yeah. Welcome back, everybody, to the Little Less Fear podcast, and Happy New Year, January 2022. What a way to start the year than to have this awesome guest on my show talking about investments. Welcome to my show, Chris. Thank you so much for being on my show.
Hey, thanks for having me on. I'm really looking forward to it.
I was reading an article on Finance Buzz about 3 days ago, and it was talking about how there's a new boom coming, a new golden age. What can you tell us about this?
All I could do is give you an opinion.
Yes, absolutely. You're the finance guy. Give us your opinion.
And if you ask 5 or 10 people what the future is going to be like for the rest of the decade, you probably get 5 or 10 different answers. So the bottom line is, nobody really knows. But I think personally, I think we're going to continue to see asset prices rise for the next few years. Stock market, real estate, and real estate's kind of my deal. And I'm putting my money where my mouth is and continuing to invest in the right types of real estate in the right markets. And that's the truth is for the serious and sophisticated investor, there's money to be made in every market cycle. So you just have to be prepared to shift and move, because there will be when there's a downturn, there will be opportunities to be had. So you just have to be prepared to shift and move. But I'm still pretty bullish on a bunch of things at this moment.
Chris, I'm going to ask you to choose between 3 keywords and continuing in exactly the manner that we're doing, and what we're discussing. This topic gets me a little hyper here, so excuse my energy. But the first word is motivation. The second word is financial freedom. And the third word is investments.
Well, no hard choices among those 3. All great topics, but I'm easily going to go with financial freedom, because that's pretty much what I do, and I'm trying to help people get there faster, and by doing things, by departing from what I call the conventional wisdom and doing things differently.
And could you give us an example of how you're doing things differently?
Well, most Americans are we come out of the womb being programmed. I'll talk about the conventional investing wisdom, and there's really kind of 2 major principles when I think of it. So the conventional investing wisdom is that you prepare for retirement or financial freedom by building a balanced portfolio of stocks, bonds, and mutual funds and ETFs, mostly through your employer's 401k. Now, I call that the 401k highway to mediocrity. And then the other principle of that is, so what you're doing is you're building this mountain of assets that for the most part don't produce any cash flow. This is a balance sheet of stocks, bonds, and mutual funds. So you can't live off a balance sheet. The way you can live on is with cash flow. So you have to sell off pieces of that portfolio at some regular intervals in order to generate the income to pay your bills. And that's where the 4% rule comes in, it's the rule that financial planners give to retirees to say, okay, you can probably safely sell off 4% of your assets every year, and you won't run out of money before you run out of life. And I could tell you that this doesn't work for 92% of Americans. So we're in a conventional investing wisdom, this way of thinking that doesn't work for 92% of the country. I mean, can you imagine anything that's just more stupid than that? It's crazy.
When did it work? And how did that even develop, that thought about that?
Well, I don't really think it ever worked, because there was a time when employers provided, some people talk about the 3-legged stool. There was a time when people had pensions, and there was Social Security, and then later came the 401k, right?
Yeah.
And then pensions kind of disappeared over time, and it wasn't just solely the fault of the 401k, but the 401k was a contributor. So pensions went away, and Social Security, is it going to be there? It may or may not, but But now it's all come down to the one-legged stool, which is everybody's putting all of their marbles into this 401k system, and there's a whole bunch of reasons why it's not a good idea, but it makes a lot of money for some people, just not the 92% of the investors. And we just get bombarded with this advertisement, and it's just pushed at us constantly. And the bottom line is, it doesn't work, and there's a better way. And that's why I write my blog, and I wrote my book, and I'm out spreading the word as much as I can.
Chris, tell us the title of your book and tell us what it's about.
The title of my book is "Get Off Your Ass and Manage Your Money: Why You Need Alternative Investments."
Yes, I love it.
So what I just described was conventional investments, stocks, bonds, and mutual funds and ETFs. So everything that's publicly traded is a conventional investment, and then pretty much everything that's not publicly traded is an alternative investment, and that would include things like notes, every different segment of real estate, residential, commercial. It would include things like precious metals, gold, silver, even cryptocurrency, small businesses. So if you own private shares of a small business, that's an alternative, but it's different than owning a share of a publicly traded company. That's a conventional investment. And so all these alternative investments outperform conventional investments in all kinds of ways, but it's not something that most people do because they don't know about it and they didn't grow up with it.
Right. And then also just the substantiality of things. It's just, wow. You just got me thinking a lot right now when you just talked about cryptocurrency, and I started like, whoa, my mind went somewhere else. What can you tell us about crypto?
So I'm very bullish on, the underlying technology, blockchain, number one.
Yeah.
And I'm very bullish on Bitcoin. There's thousands of coins out there, and if you want to be
crazy, I was scrolling through an app and it was like hundreds and hundreds, and I was like, oh my goodness.
And if you want to be a speculator, right, there's a way to make money buying and selling on these they're called alternative coins, altcoins, just like there's a way to make money, making quick buy and sells in the stock market. But it's not really investing. That's a job. You're
constantly
trading your time for money.
Yeah.
But Bitcoin is I think it's here to stay, and I think it's going to transform the world. Think every country in the world now has what's called a fiat currency, and that's a currency that is not backed by anything other than the full faith and credit of the US government or whatever that government is. Mm-hmm. And the only reason it has value is because we give it value. At the moment that the country or the people or the world decide that the dollar is worthless, it will cease to have any value. And so think about people in sub-Saharan Africa or some country that's got a terrible government, and these people go out and work, and then they get paid in the local currency, and the next day their local currency might be worth half of what it was the day before. Mm-hmm. Now, any of those people that have got an internet connection can take their currency and store it in Bitcoin, which can never be manipulated by any person or ever any government. And there's a fixed amount of it that will ever be available. So I think it's going to become, people all over the world are going to store and move wealth there as these currencies continue to be devalued by governments spending more than what they're taking in.
Chris, there are some listeners. The listeners here on this podcast range from teens to in their 80s. So for those that don't know what cryptocurrency is, could you give us a quick explanation on what that is?
So
I'm sorry,
I'm not the expert, but so there's something called a blockchain, and this is a cryptography kind of thing, a military grade program that is run by computers all over the world. And think of it as like a digital spreadsheet. And so when I make an entry on this spreadsheet here, it has to be verified by thousands of computers all over the world. And they go, yes, this is a transaction. And so that's what Bitcoin rides on this. So when there's a purchase or there's a sale, or when some miner generates Bitcoin, it gets put on the blockchain. And now you have ownership of this thing that nobody can change. And so I'm not, it's not my, the details aren't my expertise, but it's kind of the new digital gold. Gold and silver can't be manipulated. If you've got it, it's yours. You've got it. Nobody can take it. Nobody can devalue it by, like they can the dollar.
So cryptocurrency is a digital money that's going to replace our paper dollars, correct?
I don't think it's going to replace our paper dollars. I think it's going to, and here I am. So this is just totally my opinion, right? So I just got to
Go
make
ahead,
sure.
yes.
And I buy it every week. So so I don't think it's going to replace our currency. I think it's going to run along. I think it's going to exist alongside all the other currencies of the world. And a lot of the currencies of the world will probably go to some type of even more digital currency than we have now. I mean, everything is transacted kind of digitally, but other countries will probably build their own government currency on the blockchain, just like Bitcoin.
So it's a wise decision, you would say, in your opinion, to be investing even just a little bit in some crypto, especially Bitcoin.
I would, yeah. I had done some of the altcoins at one point, but now, as an investor, you go through time, you kind of narrow your focus and you make some mistakes and you learn. And now I'm pretty much strictly accumulating Bitcoin, basically dollar cost averaging by buying X amount of dollars every week. So regardless of what the price does, I just keep buying.
Yeah, the whole altcoin thing, I'm gonna admit I got a little crazy obsessive like the first 3 weeks when the whole boom started with before they started regulating everything. Now it's being a little more regulated, and I got this like pancake coin and all these coins, but they were going up and down in seconds. I mean, you could see
Yeah,
everything I put this. I'm like, you know what? It just got a little too stressful for me, and I just said forget about this. Is not even
yeah,
with my stress.
yeah, right.
But now that it's regulated, like you said, it definitely looks like Bitcoin is here to stay. And yeah, it's pretty fascinating. What other investments do you think are good for our population right now, or for Americans or anybody globally,
Yeah,
actually?
well, the I believe the best investment that there is real estate. It has a whole bunch of attributes. So real estate has appreciation.
Mm-hmm.
It can have cash flow. Banks will loan you money to buy real estate. So we're all limited in what we can invest at some point in time by our own money. But with real estate, you can borrow money to increase the amount that you can invest. And it has higher returns than the stock market. And it has a built-in tax advantage called depreciation. So if you're a stock market investor, let's see, yeah, you get appreciation. You don't get cash flow. The banks won't loan you money to borrow stocks, and you have no built-in tax advantages. And that's pretty much the same with all conventional investments. So in my book, there is something called the hierarchy of investors, and I'll show you what it looks like. It looks like this. And in the
Like it.
hierarchy of investors, I compare the conventional investments against the alternatives in 13 different categories. 2 items are neutral. 1 item is in favor of conventional investments, and the other 10 are all advantages to alternatives. So when you have all these overwhelming advantages, in my opinion, the only reason people don't invest in alternatives is because they don't know about it, and it's a little intimidating, and you have to have more financial education to go out and invest in some of these things than you do in the stock market. And the proof is that I understand in today's employment world, if you go get a job, you and your company has a 401k, they will automatically enroll you and pick the amount of your paycheck that goes into it, and even pick the mix of stocks, bonds, and mutual funds that you invest in. So that shows you don't need to know anything to invest in the stock market. That's not the case with alternative investments. You got to be smarter, but the rewards are so overwhelming. And the part of my story and why I do all this is that in 2009, in my mid 40s, I had I lost 55% all my assets and thousands of dollars a month in cash flow. And that was caused by the end of my 19-year marriage. There's lots of people can experience that. But in 9 short years after that, using alternative investments, I made up all that 55% loss and multiplied it many times over. And I never have to work in if I don't want to. I wouldn't have been able to do that on the 401k highway to mediocrity.
So basically, what I'm hearing, and I want to make sure that I'm understanding correctly. The best thing to do to plan for retirement is to invest in property.
I believe so. I mean, it's not the only thing you can invest in, but real estate is really, it's just the best vehicle out there. And I can't quote you any statistics, but even, people get wealthy through a lot of different ways. Some people are, very, executives, have high paying jobs, have stock options and all that stuff. And even the people that didn't get wealthy in real estate, a lot of those people store their wealth in real estate.
Right. Yeah, absolutely. And so how does somebody go about, let's say a younger population that they're starting out, how does someone even get property with these degenerate times going on right now? How do they even start to invest, especially right now during the pandemic and everything? I'm sure you're probably getting a lot of people come in and asking for some advice on this.
Well, there's different ways to do it. You can be the do-it-yourselfer. You got to take some classes, read some books. You go buy a single family rental. You manage it yourself, and you do. And that's there are plenty of people that do it, but it's a hard road, especially if you want to have a life, because you take it on a whole nother job in addition to the job that you already have.
It is.
If I was starting over in my 20s, knowing what I know now, there are throughout the country, there are what are called turnkey single family rental providers. And so these are people that work, companies that work in a particular market or multiple markets, and they go and select houses, or sometimes they build houses. They will go build or find houses that will make good rentals, the 3-bedroom, 2-bath, 1,500 square foot house in a good market. They will buy it, they will rehab it, and rehab it with quality materials so it'll be durable because they know it's going to a tenant. And then they will put a tenant in it, and they are also the property manager. So then you come along with your down payment and your bank loan, and you buy what's called a fully loaded rental. It's already done, right? And now that thing just generates the cash flow, and you have a property manager who specializes in this market in managing a whole bunch of single family rentals. And now there will be times when the property, you might have some arrangement with the property manager that says, okay, you take care of all the expenses, anything over $500, you call me and let me know. and so that's the easiest way to do it. And I have 2 of those resources listed on the resources page of my website. And so I have not used these companies because I do apartment buildings. I do them through syndications, which have some income and net worth requirements. But if I was starting over, this is where I would start.
That's excellent advice. Thank you so much for that input. I really appreciate it.
Yeah.
Do you also do coaching for people that are looking into investments and their brand new properties, or even getting rid of old properties, or even moving state to state? I mean, you're also like a coach for that?
A little bit. So on my website, there's a coffee cup, and you can
saw
click on
that.
there.
I like that.
You can click on there to have a free 30-minute virtual coffee with me, and we can talk about stuff. I have another button on there that says it's a coaching program, and I put it up there because people ask me for it. It's not something I really pursue. It's more like a job, and I don't really want to have a job and have my schedule tied up that I got to be certain places every week. So
Yeah.
I do a little bit of that kind of selectively, but not a lot.
Seems the market seems pretty hot right now, especially. I mean, I'm in California. I know that you're in South Carolina. I'm sorry.
South Carolina, yeah.
South Carolina. How is the market in South Carolina?
Well, coming from moving from Seattle to South Carolina in May of this year, the
Wow.
price points are a lot lower. And we're purposely renting here just because we've never lived in South Carolina before. Will we live in this town of Somerville that we're in now? Maybe, maybe not. We'll probably be, at some point we'll buy, and we'll probably be within a 25-mile radius of here. But my girlfriend's watching the prices a little bit more than I am, and the price increases seem to be slowing, and the time on the market seems to be increasing. And I think, every real estate market is different, right? So you can't just say, here's what's happening. Prices are going up like crazy still in some places they're going down. So it's really hard. And that's why I would say you really don't want to do this yourself. You want to find somebody who specializes and knows which markets are going where, and has a real focus in a particular market. And I kind of what I do is similar to the single family rental, but I just do it in big, large apartment buildings. And I don't do it myself. I go with what's called a syndicator, somebody who puts these big deals together. And I'm basically betting that these people know what they're doing, and they have a good track record. And as long as, if they're bringing deals in front of me, they're bringing them in front of me because we can all make money doing them.
Right.
And so I'm basically continued to do what I've done for the last, 5 years.
I like the idea of renting first especially when you move from one state to another. I mean, that's probably the best idea I'm imagining, right? To go, let's say I decide to move to New York, or I decide to move to Maine. I mean, it would probably be best to rent a property before, do one of the things that you were recommending that if you were 20 again to do, correct?
Yeah, because I can imagine this. So I could almost predict the future if we had done it this way. Before moving here, I'd probably spend a total of 4 days in this particular town. That's it. So unless I just came back and forth across the country and spend weeks at a time here, I would have picked a house and we would have moved in, and within 6 months, I would have gone, if I'd known better, I'd have moved 6 miles in that direction, right? Or I don't actually like South Carolina at all. What was I thinking? So I just didn't want to go through that. And there was a little bit of it that I was kind of tired of being a homeowner. I had an older house on a big piece of property, and the maintenance of the yard and just the things that go wrong with a house that's 60 plus years old. I was ready to come down here and just pay one monthly fee and not have to worry about anything for a couple years. And there's also just a little bit of watching what's going to happen with the market. Is it what So we sold houses in Seattle at a really high point. Now, could I be lucky enough to sell high and buy low? So there's two things here going on. Renting was the right thing, just to make sure we know we're in the place where we want to be. And there was also, it might not hurt us to wait a year or two and actually see if this market settles down a little bit.
Right. Wow. So much awesome information. Thank you so much.
Yeah.
I really appreciate that. And what kind of advice can you give people who are looking to retire?
Oh, where to start? I'm actually working on my December blog article, and so I'll give you a sneak preview of this. So I've created something called the wealth building. I think I'm going to call it the wealth building matrix. So there's what I think are four overriding principles that determine how much wealth you build and how quickly you build it. And one of them is I made this up, right? Made it up based on my knowledge. And I think there would be if I got a bunch of investors in the room, I think there would be a lot of agreement within this. So one is the amount of money that you invest. That's going to determine how much you accumulate, right? And then the other one is the return that you get on that money that you invested. And the third thing is the taxes that you pay on the income from those investments. And the fourth thing is something called velocity. So when you put money into an investment, how quickly do you get that money? And do you have a good place to store it where it's getting a decent return while you're waiting for it to go into the next deal? So those are the four, what I think are kind of overall principles that are good for everyone. And then I came up with 7 steps these were the steps that helped me make up a 55% loss and multiply it many times over in 9 years. Now, the steps that that I take work for me. They might not work for you just because you have a different skill set and a different risk tolerance. But it's what's interesting to see is as I go through each of these, how many of these other boxes that they check in terms of the amount that you invest, the ROI, the taxes, and the velocity. So there's kind of so you can see kind of a matrix, and some of them check one box and some of them check all four. So the first thing, so I said the amount of money that you invest. So the first step is to be the best at whatever you do, because the only money any of us has to invest is the money that's above and beyond our living expenses. Mm-hmm. So if you make $65,000 a year and your living expenses are $65,000 a year, you've got zero to invest, right? So you have to be the best at your job. So you're the guy that gets the regular promotions and the regular raises. So pretty soon your income is now 75,000. You've got an extra, assuming you don't go and spend it all, you've got an extra $10,000 to invest in whatever you choose to invest in. Mm-hmm. And then the next thing is to maintain good credit. And the reason is because I said the only money you have, you don't have to only use your money. Matter of fact, with alternatives in real estate, you don't typically go out and buy a rental property with cash, you buy it with a bank loan. So what you want to do is not only use your money, but use other people's money. And the way you're going to get that money and get it at a good rate is to have good credit. And that includes, and you'll pay less for insurance with good credit. You'll get personal lines of credit, you'll get home equity lines of credit, in addition to maybe getting a loan for a rental property. And then the next one, and again, this is kind of me. For the 18 years before my children went to college, I never bought a new car. So when people said, Chris, how did you, on mostly a single family income, put two kids through college? And at that time, I wasn't making some of the money that I made later in life. Well, when I added up what the cost would have been if I had bought two new cars for me and my wife at the time, every 3 to 5 years, not doing that was enough to put two kids through college.
That makes sense.
And excuse me, number 4 is it's kind of a budgeting item. There's kind of I'm not very good at keeping track of every dollar that I spend. Mm-hmm. So that's kind of what I call the macro budget, the micro budgeting way. But I like the macro budgeting way, which I call invest until it hurts, which means you say, hey, I'm going to invest X amount of a certain percentage of my income or a certain amount of dollars every month. And that, whatever that is, it should be a little uncomfortable. And then spend everything else and don't worry about it. Get the $5 coffee, go out after work to happy hour, whatever, but make sure that that amount that you said you're going to invest, you do, and then that's your budgeting thing, right? And over time, you would increase that, hopefully, as you earn more money. And then the 5th thing relates to the velocity of money. And this is just, and there's no room to talk about this here, but I think the foundation of every serious investor's portfolio should be a properly constructed cash value life insurance policy. And that's going to sound totally crazy. And I've got 2 articles on my blog that go into that. And then number 6 is invest in real estate, because it's just simply the best investment that there is. And number 7 is make your spouse a priority, because if you get divorced, it will be financially devastating. So
that's an understatement. That's for sure.
So those are the 7 things that work for me. And there's some things in there that might work for other people too. But for example, investing in real estate checks all 4 boxes: the amount that you can invest, because you can use other people's money. You can't borrow money to buy stocks, bonds, and mutual funds, but you can borrow money to invest in real estate. Your returns are higher, you get a tax benefit. And the velocity piece of real estate is that as that real estate's become more valuable, I can refinance it and take some money out of it. And that's more money that I have to go invest.
That's so true.
Sorry, that's a really long answer to your question.
No, that is exactly the great information that's definitely putting me where I need to keep my mind. And that was property. That's actually what I'm looking into over here. As far as like California goes, oh my goodness. In my case, it's best for me to get a condo, especially because to me, that's just the best way to go for someone in their 40s. What do you think about that? What would you tell me?
Well, so Are you talking about a primary residence or a rental property?
Yeah, you know what? I'm actually looking at a condo to make my primary probably for the next 3 years and
Mhm.
then rent out
Right.
and then get
So,
something smaller, a little more comfortable for myself.
right. I would say if you're talking about investment property, you don't have to. That's the beauty of having these turnkey family. You need to invest where the best market is for rentals, and that I can tell you that is not in California, anywhere in California probably. So yeah, you want if you want to be a real estate investor,
Yeah.
you need to say where's the best market for single family rentals or apartment building, and there are good markets all over the country, and that might not be where you live, which is the other reason that you need to get some help.
Right. Oh my goodness, California is, whew, yeah, a little overpopulated over here.
Yeah, yeah, for sure.
Thanks so much for being on my show. My goodness, this
Oh,
has been very inspiring. Definitely a great topic for the new year. There's a lot of this discussion going on everywhere. And where can we find you? I know you have a YouTube channel as well, correct?
yeah. So the best way to find me is just to go to the website, theprolificinvestor.net, not .com, theprolificinvestor.net. And there's a handful of ways to interact with me. There's a conventional wisdom quiz. It's a 10-question quiz. You can take it, and it's going to be really tricky. And you're going to think you know what all the right answers are. And hopefully you do, but you might miss a couple. And then there's the virtual coffee. And there is the mentoring program, which I don't really promote, but I selectively do that. And of course, there's a link to buy the book. And there's a whole bunch, in addition to the blog articles, there's free downloadable resources. I do have a YouTube channel, but the links to YouTube and Facebook and Instagram and everything are all right
On your
there
website?
on the website. So that's the place to go. And all the blog articles are there. Some of them have an associated video on YouTube, some of them don't, but you can get to everything from there. So.
Excellent. Well, thank you so much for your time. Thanks for your energy and for sharing your light. The prolific investor here, Mr. Chris. Thank you so much for being on my show, A Little Less for Your podcast. You have a pleasant day
Thanks,
there, and
Lino. I really
Happy New
appreciate it.
Year
It's a
to
lot of
you.
fun.
Happy
Yeah,
New
Happy
Year.
New Year and a belated
Enjoy
Merry
South
Christmas,
Carolina.
everything. Oh yeah, absolutely. Absolutely.
Thank you so much.
Take care.
Bye.